Hello, my name is David Miller. I'm speaking to you in early February. I'm the manager of Nexus Global Solutions portfolio and the co-manager of Dynamic. Well, it's been quite a start to the year, certainly full of events. But in the end, markets having started well in the first 2 weeks of the month drifted lower. And as a result, Dynamic, the equity portfolio, was down by around 2%, and Solutions, the more diversified portfolio, down by just over 1%. Just to remind you, both portfolios made a profit last year in that difficult time of 2020. So we gave a little bit back. Asset allocation, not much changed. Dynamic is 97% invested in global equities. Solutions is 28% in fixed interest and cash, 56% in equities, and the balance in alternatives. Not much change there. Our focus, as always, is on stock selection. So what were these events that drove markets up and down in the first month of the year? Well, the headlines were pretty clear. The rollout of the vaccine was really a dominant story throughout. The new US administration under President Biden and initial decisions. Then we had problems with Brexit implementation the first few weeks, a few teething problems or some longer term issues, difficult to tell. And towards the end of the month, the famous speculative bubble surrounding Robinhood and GameStop, which certainly captured the headlines with some extraordinary events and volatility. We weren't part of that, I'm pleased to say. Those were the headlines. That's what we all know. In the background, what was most important is that the support to the markets over the last year remain in place. Low interest rates, lots of government support, and all backed up by low inflation. And none of that really changed last month. And that is the most important point to note as we look forward into the rest of this year. And the other thing most important to note is that we're investing in companies, not politicians, governments, or stories. Companies are delivering really good numbers at the start of this year, reporting from the end of 2020, last year's numbers, but accompanying those numbers, optimistic statements. I am, of course, talking about good companies, the sort of companies we're investing in that are delivering despite the virus and restrictions. All of this is in the mix, but this combination of monetary and government support with companies doing well in the current environment, those are the foundations of both portfolios. A few companies, just to give you an example, it isn't really about geography at the moment. So standout performers last month, Ocado from the UK, but now becoming a global force in delivery, TSMC, which makes semiconductors in Taiwan, and Alibaba, the Chinese equivalent of Amazon, and a lot more. It's possible to make returns in many places. And in a low growth environment, that's what it's all about, finding where you can make a return. That leads through to shareholder returns, whether it's through capital growth or dividends, sometimes a combination of the two. So where do we go from here? It's going to be a matter of patience and attention to detail, in my opinion. Conditions remain tough. No getting away from that. We're in the middle of an incomplete recovery from the recession caused by last year's restrictions. We're in the middle of a new set of restrictions. We know that's not good news. We can look outside our front door, but not venture much further. So we know that. But markets and investors look forward, and we're looking forward to the second half of the year. What will that bring? Well, the vaccine rollout will be months further on. Let's hope it goes well and allows the restrictions to be relaxed, if not completely removed. This is good news because the evidence is that we're saving in isolation, and that money is on standby to be spent in due course. And that's what happened last summer. And that will be a great boost to many parts of the global economy, many companies in different industries and services. That's what we're looking forward to. And the forecasts for the second half of this year are looking good. So I think to sum up, this year is a year where patience will be at a premium together with attention to detail. Small steps to the future. I think is just a fact of life. But we are getting there steadily, and I think it's moving in the right direction. So I hope that these comments, this description of what we're up to is helpful to you, and I look forward to reporting to you again in a month's time. Thank you.